the economics of financial data. The 40 billion industry thrives, and we're going to explore how we basically decompose it into all the categories and how does it make money and how it survives. So don't forget to subscribe. Financial data is just like the human body. It encounters multiple needs, and it's extremely complex. And every organ, every process is key for the survival of the body, which in this case is the financial market. So when you look at the financial data industry, it's captivating because it's full of public information that generates private value. So as we can see, it's a maze of data, feeds, platform, and proprietary system becomes a block of the financial system. Your price movements, your attribution, your returns, everything starts somewhere and ends up with an analysis. So that's what it's so captivating. And when we talk to financial data, we're not talking about like payments or balance of payments or credit card debt, this and that. We're talking about pure capital market data, so market data, which is your prices, your yields, your trades, and the company financials that power investment decisions. Because at the end of the day, finance is the experience, is the field where you need to aggregate and consolidate money into investments. It's the business of allocating properly money into future investments. And how do you do that? Well, you have to price, you have to provide yields, trades, and statements. With all those inputs and your security setups, you're basically set to start analyzing and creating industries. So how data works, data is an asset. And why is it an asset? Because businesses give you the data through payments, through affiliations, to company fundamentals. And then you also become the key organizer of all that data. You start simulating that data. You start bringing aggregation and harmonizing it. And you start licensing the process that you harmonize or the visualization that you present to people. And then it becomes the core business processes, because then other businesses need the data they actually provide, but you are giving it to them in a better, more aggregate or a cleaner way. So it's all interconnected. Data companies need businesses to provide them data so they can, in fact, return it back with more value added. So this is how the marginal cost of data acquisition over time becomes. It's a really slow start. So you initial break force acquisition, so you start capturing certain amount of data. And we're going to talk in the market data. So usually start with prices, or maybe with volumes of trading, or maybe with industry selection, or rating selection, or fundamentals, anything. And then you start doing economies of scale, because with the same data point that you analyze, you can start selling the same data point to hundreds and hundreds of clients without doing much. You already did once, you can sell it thousands of times. And then you start getting data loops, because you start getting more mature data and more ways of how businesses are using the data, but also how businesses are using the data creates more data. So you start maturing and capturing those data loops. And at the end, you start creating a product with different edge cases, and you start creating niche products. So everything starts with the production of data, then the distribution of data, and then the activation of that data. So production, think about it, capturing the data. Distributing is basically aggregating, organizing it so it can be used. And then activation is when you have all that data and you start creating value, research, analytics, trends. And that's what happens in the market, the production data. So raw financial data origination, it adds values by extracting raw data as a byproduct from trading operations. When you trade, when you sell something or you buy something, you are giving the market a signal of what's happening at a price, at a yield, at a discount, at analytics. all that information then is captured, and then that provides output so other companies can capture that and organize it. So think about CME Group, which is the world's largest derivatives exchange. It processes an astonishing amount of 8.4 trillion in daily interest rates futures alone. Imagine the amount of data they can capture. And all that data, it also a signal of the economy and all the market participants. And being able to grasp all of that is extremely valuable for SME Group. Who else can do that? Unless you have an exchange, you cannot do that. So the production of data is extremely profitable. Then you have the distribution. The distribution actually is from the three stages, the one that creates the less amount of profit, because you don't own the mining of data and you don't own all the value added. You're basically an intermediary, capturing that data, organizing it, making it pretty, and then selling. So think about FactSet, which is, we saw in one of episodes how FactSet makes money, and it performs the crucial but complex task of collecting and standardizing data from 850 sources and offering it to 200,000 users. So makes it usable information. It's not as too sexy business because just capturing, organizing, and selling it, but it's extremely needed and it's crucial, right? But that's why the margins are lower, because it's not like a requirement. You can distribute data, but you need to have the entry point and the exit point, because at the end of the day, what values the most is when you are creating analysis based on that data. So the activation is when this information, this data is analyzed and converted into proprietary insights. It adds value by adding meaning and context to the existing data, because you can have a lot of data, but then what else do you do? So MSCI, star in the industry, what do? They capture all the prices, they capture all the industries, they capture all the companies, the fundamentals, and then they create an index. So then the equity market can have a benchmark of how to invest the money. So now MSCI, with all the activation of data, is able to sell benchmarks and is now the standard benchmark for over 16.5 trillion in equity assets globally, just by selling an index. They don't have to manage any money. They don't have to provide macroeconomic analysis or macro political analysis or credit research. No, they just capture the data, analyze in a certain way that they can sell it as an index and make money out of it. So it is fascinating how the financial data works. It's a sector that is overlooked, because you just think it's boring, just aggregating here and there. And the sexy part of finance is actually going and do be a portfolio manager or an asset manager or doing credit research or doing all the deals. When also there is a huge need for people in the data industry where you know your finance, but if you're able to capture and provide that data to the institutional investors and financial institutions, you can make a lot of money. So thank you for watching, and let us know what you think.